Dear Warren, I saw in a 2020 headline that Berkshire Hathaway has sold all its airline holdings worth over $4 billion, including positions in United, American, Southwest, and Delta. Various sources also reported in the same month that Berkshire has sold billions of worth of Goldman Sachs, Wells Fargo, and Bank of America stocks. I understand your rationale on those trades. Who would dare fly when he can easily catch the coronavirus on the plane, when there's 1 in 100 chance one might die from the disease? As for the banks, which borrow short and lend long, there's no profit when there's no yield spread. With estimates of US GDP contracting at 10 to 15% in Q2 2020, and of US unemployment at around 20%, not seen since the Great Depression, much of the world remain locking down, it makes sense that you are keeping $137 billion in cash. With interest rates at zero, I remember a news piece in 2016 in which you said, if the government absolutely said interest rates are going to be zero for 50 years, the Dow would be at 100,000. To understand your logic, I myself used a little example. Suppose Treasury yield is 2% and investors demand 50% premium in dividend yields over Treasury yields. The fair value for an airline that pays $3 a share in annual dividend will be $100 a share. Suppose also that the airline leases airplanes at the cost of $3 a share in annual interest payment, which is included as part of the overall expenses deducted from revenue to arrive at profits and dividends. Now, let's say the Treasury yield is lowered to 1%, while investors still demand 50% premium in dividend yields, which would then be 1.5%. An airline that pays $3 a share in annual dividend would then be valued at $200 a share. Keep in mind, there's additional $1.50 a share savings from airplane interest lease payments at lower interest rates, which could boost the dividend to $4.50 a share, driving fair valuation to over $300 a share. With my example, it's not hard to see why the Nasdaq index has just reached an all-time high. As if zero interest rates were not enough, the Fed economists are making a case for negative interest rates as I'm writing this letter to you. Everyone knew you were speaking hypothetically of your 100,000 Dow level. But aren't we already at permanent zero interest rates? How can interest rates be normalized with ever-increasing Treasury debt already at $19.5 trillion, with the Fed's balance sheet at $6.98 trillion, and US Treasury looking to borrow trillions more from the Fed to finance its projected $3.8 trillion deficit in 2020 alone? How would the Fed unwind its position, even at 0% interest rate? Would the US government ever be able to repay its debt, returning to your $137 billion cash position? I am curious, what would you do with your cash, with stocks at an all-time high? How would you apply the David Dodd, Benjamin Graham value investing method in their book Security Analysis, when there are no earnings with which to calculate the PE ratio? If stocks are too expensive, what about non-traditional assets you have bought in the past, such as silver? I noted that you said in your 1997 letter, we purchased 111 million ounces silver marked to market. That position produced a pre-tax gain of $97 million in 1997. In the letter, you further added, 30 years ago, I bought silver because I anticipated its demonetization by the US government. Ever since, I have followed the metal's fundamentals, but have not owned it. In recent years, meaning 1997, bullion inventories have fallen materially, and last summer, Charlie and I concluded that a higher price would be needed to establish equilibrium. Inflation expectations, it should be noted, play no part in our calculation of silver's value. I'm curious why you left out inflation expectations in your calculation of silver's value. In fact, inflation is something you have not talked about until recently. And when you didn't mince words, the United States is spewing a potentially damaging substance in our economy, greenback emissions, Warren Buffett wrote. Unchecked, greenback emissions will certainly cause the purchasing power of currency to melt. Seeing recent looting and riots in some ways related to income inequality, I couldn't help but think of two other great quotes. There is no subtler, no surer means of overturning the existing basis of society than to debug the currency. The process engages all the hidden forces of economic law on the side of destruction, and does it in a manner which not one man in a million is able to diagnose. John Maynard Keynes. It is well that the people of the nation do not understand our banking and monetary system, for if they did, I believe there will be a revolution before tomorrow morning. Henry Ford. You have opined that gold and to some extent silver are non-productive assets, unlike farmlands or factories, for example. However, by your analogy, Berkshire's $137 billion cash represented by a few computer digits, which you can't eat either. Gold and silver are money. Good money as described by Aristotle, money which cannot be printed. I wonder whether you shy away from discussing inflation and talk down on gold publicly because you know that a $10,000 gold price could erode public's confidence in the dollar and spell the end of the dollar standard, which will replace the gold standard that since 1973 has provided US with an economic advantage. Is buying gold an American? The same as betting against America, which you have warned against. Having digressed somewhat into philosophical realm, I shall leave the gold discussion with Article 1, Section 10 of the Constitution, which reads, "No state shall coin money, emit bills of credit, make anything but gold and silver a tender in payment of debts." The US has been without such money since 1968. According to Forbes, you bought silver at under $5 an ounce and sold it in 2006 at $13 an ounce. Just a few years later, silver reached $50 an ounce. Whatever your reason for selling, today's silver price of $18 an ounce is not far from your 2006 exit price. Focusing again on productive asset class, what are your thoughts on owning gold and silver mining companies? Warren, you own banks that print money. What about owning companies that produce gold and silver? If I may go one step further and recommend you look at Silver Elephant, which owns a high-grade pre-production stage deposit of 60 million ounces of independently verifiable silver in the ground. Why mine silver in exchange for fiat money today when silver should be kept safe in the ground until silver prices are much higher? In these interesting times, I look forward to your reply. Sincerely, John Lee, Chairman, Silver Elephant Mining Corp.